All right, let's turn to crypto. It has been, of course, a very volatile ride for investors recently. So what does that mean? What's the outlook? We're joined now by Ian Lowe from Dacxi. Ian, good to talk to you this afternoon. Yeah, it's been a matter of just strap yourself in at the moment, isn't it? But we have seen a bit of a comeback, recovery in certainly those leading cryptos, Bitcoin obviously among them. How have you viewed that sell-off that we've seen?
Yeah, look, thanks for having me. I appreciate the question. Look, we would really counsel everyone to just take a deep breath and take a few steps back. And really what we mean by that is cryptocurrency is digital money version 1.0. Okay, we're in the very early stages of its global adoption. And whilst that's growing and with it the industry is starting to mature, the reality is that we're really in the first cycle of what is going to develop over multiple cycles. And so volatility, whether it's linked to an announcement from Mr. Musk or related to announcements coming out of different state actors about their objectives and intentions, all of these are part of that really first phase of manifestation of digital money. And so we encourage people to think about this in sort of the digital continuum. In other words, digital communications, digital transactions, digital media, digital money. And cryptocurrencies is just the first manifestation of digital money. And it's going to be a volatile market. Another sort of reference point on this is there's close to 10,000 coins in existence today, and that number is growing. Clearly 10,000 coins are not going to last the journey. And so the market volatility, we think is in a broader context, probably a good thing, whilst it creates some nervous moments for lots of people along the way. The reality is that it creates a shakeout in the market where a lot of that long tail, which are highly speculative, and the people that trade those coins are ultimately speculators, they will shake out and we'll be left with the coins that are solving real problems and have real use cases. So in other words, the volatility we've seen recently, we think is appropriate. We think there will be some level of continued volatility, but the winning crypto coins in this new emerging market of digital money will absolutely prevail and will be over the medium to longer term very successful.
And in your mind, what are those specific coins that are standout at the moment, Ian?
Well, look, we would, in our business, we don't give investment advice. What we do go to a lot of effort to do is to understand the coins that we think offer a medium to long-term return to the investor. And so we take very much a wealth building perspective of the market. And so really more generally, what we would say to our customers is we're not going to bring into our exchange very long tail coins that are highly speculative, are going to be extremely volatile and probably won't survive. We're interested in those that have established use cases, are what we would consider to be tier one opportunities, and they ultimately solve a problem that is demonstrable. So,
all right, and on that point, sorry, go on.
In other words, focus on the top coins and understand enough about them to form a view.
All right, so is Bitcoin among those then, given, particularly when you compare it perhaps with Ethereum or Cardano, its use case is less obvious?
Well, look, certainly Bitcoin has sort of, it's the prototype, right? So rightly or wrongly, it gets a lot of attention. By market value, it's the number one coin today. Will that be the case, 5, 6, 7 market cycles from now? I don't have a view. Will Bitcoin do well over the longer term? Our view is yes, it will. But the use cases that we're seeing associated with some of the, the fast-moving coins, some of the strong ones are really around the infrastructure plays where they're offering the technology. So for example, they're the piping and the tool set through which the ecosystem will evolve and thrive. So those types of coins that are, have strong use cases, They enable the ecosystem to develop. They're an infrastructure type play, or they're pinned to some underlying value with a strong use case around a closed ecosystem of many participants, the underlying value of a business or some other currency. We think they're much safer propositions if you take an investor view rather than an intraday trading view.
Ian, what do you think of the emergence of sovereign coins? So you look at China, the digital yuan, the Bank of England have announced that they might have something similar. How does this affect the decentralized finance infrastructure? Because it's not really decentralized finance, is it?
Yeah, look, this is very interesting, and we're all sitting here watching this unfold with great interest. If we talk about sovereign coins, different states have different objectives, and they will pursue those objectives. I think a lot of countries will take a wait and see approach. But what we do know is that all developed economies around the world are absolutely neck deep looking at this, and at various stages of their understanding of what they want to do next. We will see sovereign coins emerge over the journey. The implications of that has been speculated on, broadly. I think some players in the market are determined to be first, and others are determined not to be first. And again, we can't sit here and say with certainty how that will play out. But what we do know is that all of these different manifestations of the underlying blockchain technology will continue to emerge. The market will continue to evolve, and as it matures, it will become clearer and clearer as to which of those currencies will prevail. So, we can't sit here today and say, which sovereign coins will emerge, when they will emerge, and what that means for the world. We know it's happening. We're keeping a close eye on it. And we just encourage people to take a long-term view. If you don't have a risk appetite, given that this is still in its nascent stages, digital money, as I say more generally, then we would say take a wait-and-see approach and sit on the sidelines until you understand enough about the market to take a position.
Meanwhile, what threat does impending regulation, I mean, we've certainly seen that implied in China. What threat does that pose to those DeFi coins most immediately then, given certainly talk of that as part of the reason why we saw that sell down?
Yeah, look, our view is that regulation is really important. It not only legitimizes the industry and positions it for growth, but one of the reasons it does that is it gives people some confidence to participate. So regulation, it's interesting, isn't it? This is an industry that philosophically was founded on the idea that wouldn't it be great if we could build an ecosystem of value transfer? It was a digital construct and we could do it without regulation. I think what we now all appreciate is that, these different instruments that are now emerging, whether they're cryptocurrencies, tokens, which will be the next wave, regulation is really important. It creates consumer confidence. It gives companies that want to innovate in this area the confidence they need to invest in that innovation, and it will drive accelerated maturity. So our view is that regulation more generally is really important. We're at the table with a number of industry players talking about what we think regulation needs to achieve. But the idea that digital money can coexist along with sort of non-digital money, and that one ecosystem quite rightly needs to be regulated and the other shouldn't be, is of course absurd.
Ian, I'd love to get your perspective on the energy consumption some of this mining takes up. We've seen Iran, ban mining. We've seen similar outages in China. The amount of energy that it takes up to do this is significant, isn't it? It's, sort of the same energy that, whole countries use. So what's your perspective on that?
Yeah, look, this is fantastic, isn't it? All the Musk headlines around, we're going to accept Bitcoin as payment for our cars, and now we've changed our mind because it's too energy intensive. Look, there's a couple of things that would just, I think, help people put this into context. The first is that Bitcoin, as the prototype for cryptocurrency, is energy intensive. There's no doubt about that. But there's a number of cryptocurrencies that have emerged since then that are not only significantly more energy efficient, but have been designed specifically because or in recognition of the problem of the lack of energy efficiency in Bitcoin. I would use the analogy of sort of computer chips and solar panels. If we looked at sort of the first iterations of those new technologies and the efficiency with which they performed their task relative to more recent iterations of those technologies, they bear absolutely no comparison to each other. And so it's the same really with the energy efficiency of Bitcoin. New coins have already been launched that are materially more energy efficient. Bitcoin itself has scope with its methodologically to become much more energy efficient in terms of the way that it interacts with the underlying blockchain. But there's a couple of other points that are interesting. I mean, there's been some recent studies released that sort of analyzed this in more detail. Bitcoin globally uses less than 50% of the energy that the gold industry uses. Bitcoin globally uses less than 50% of the energy that banking globally uses. And of course, more and more of our energy consumption.
Oh, I think, Ian, sorry, we've just lost your connection there. But look, Ian, we are at a time. Thanks so much for joining us from Dacxi.
Thanks for having me.